Hello and welcome to today's Trading Hour Live, brought to you by the Live Trade Room, where we effectively cover everything you need to be able to pick out those high probability trading opportunities across some of the world's largest markets, from foreign exchange to commodities and also global indices as well. So it is important for us to have a diversified, have a multi-asset class view of these markets, because we want to identify these market correlations, which were, for those of you that were able to join us yesterday, there was an uncoupling with the cross multi-asset classes and looking at the correlations between different markets. So a bit of a strange market condition yesterday. The good news is we've got more coherent market conditions today. As a result, it's giving us a number of really good opportunities, which we shall get into in just a moment. Just to let you know, we at the Live Trade Room, we have a number of live trade rooms every day, all really designed to prepare our traders in advance of all of these moves. And we have this session at 9 o'clock every night. There's also a Capital Growth Live Trade Room at 9:45 for those of you that want to grow capital over the longer term and only commit a relatively short period of time, because appreciate trading, whether you're a day trader, whether you're a part-time trader, time is probably tight for all of us. So if that would suit you, we can. You're very welcome to join us. Do go to our website, thelivetraderoom.com, for more information on that. Do give us a thumbs up as well if you enjoy this broadcast. Subscribe to our channel, click the bell function, and you'll be notified when we do go live. So, without further ado then, let's get straight into this trading session. If we can start, as we always do, with our risk warning. Of course, take a brief moment to familiarise yourself with our risk warning currently up on screen. Okay, so first thing we do when we trade these financial markets is we want to have a understanding of some of the market moves and the data points for the trading session. So the reason for that is that you avoid getting into, I suppose, a euro-dollar trade, just 10 minutes before we have an ECB announcement, for example. So that's not really, these are things that you can avoid, these little errors. So today now, Wednesday the 19th of May, what we can see is we had a CPI figure, an inflationary figure from the UK, and it came in line with expectations, which is, I suppose, broadly speaking, that's the good news. And it's a good contrast as well to what's going on in the US, where we had a significant miss last week on your CPI and your PPI data last week. But as you can see, a little bit more stability in the UK in terms of forecasts and expectations and things like that. We've got the ECB Financial Stability Review. If you go to Forex Factory, you'll be able to get a brief update. So you'll see where things are at. Broadly speaking, as per expectations, really. Certainly with regards to the inflation story, which is something that these markets are really trying to grapple with, and they have been now for the last couple of weeks. So, like I said, we've got slightly more coherent market conditions this evening, which is the good news. Good afternoon, Finbar. I hope you're well. Let's see what we got today. Hopefully we'll have some good moves.
Sinking by 25% to about 2,500.
That's our Squawk service, so I might mute that for just a second. Anyone trading the Canadian dollar, just be mindful you've got monthly CPI data. So we're looking for the deviation of that move. Anyone trading crude oil, we'll have the inventories number at 3:30. And a very important event, and we might be seeing a bit of price action in the build up to this event, which could be something like almost sell the rumor, buy the fact. So it'd be interesting to see if today's FOMC meeting minutes will be a bit of a turnaround point for these markets. That would be certainly the concern, and we're currently selling the stock markets at the moment. So We'll be watching that event quite carefully, and the markets will just be looking at those meeting minutes to try and work out whether there will be actually an early tapering of their bond buying program, and they will be potentially bringing forward rate increases, which would be, again, if that's what the market interpret from this this meeting minutes release later on today, then we would expect further downside. So we shall see. We shall wait and see. Okay, so that's just a little review of the news then. So let's get into these charts and we'll see what opportunities we have. So in last night's, oops, excuse me, don't know what happened there. Let me take that back and let me bring up our charts again. Okay, that's a bit better, isn't it? Right. So these are the markets that we were discussing last night in terms of some high probability trading opportunities. We were looking for, I suppose it's important to probably start on the main driver in this market. And if I just get up our pen here, we'll explain, I suppose, the approach or the thinking behind this trade. So this is our all-time high. Prices eventually sort of really collapsed down to these lows down here to the 40.36. We had a pretty resilient bounce back, a lot further than we ever anticipated. So we've already been selling this market once. I think it was around here, if I'm not mistaken. So we made some good money on it, but the pullback was really, really sharp, and it was one of these pullbacks that was just relentless and really tough from a trading perspective and a psychological perspective to get those really sharp pullbacks. What you could expect is a little bit of a bounce, an attempt to make a new low, and what that can do is give you an opportunity to make decisions at a lower price. But when you get this market which is bouncing back and you end up sort of breaking even on it pretty quickly, and then it continues to just plow through any stop losses that you have in place, and we mitigated risk on it, so we took a small loss on that trade, but you can see it just accelerated to the upside. But by no means was that the end of the play for this trade. So what we then subsequently have seen, and then now it's a case of try to get your timing right. You can see for those of you that are familiar with your technical analysis, you've got an M formation which creates a double top. It creates a clearly defined low, and then we're looking for the accelerated move to the downside, which is effectively what we've seen. So our entry was just at slightly higher price, with our stop loss just technically above these levels, and now we've got the move further to the downside. So now the question starts to become, how do we manage this trade from here? So again, we don't want to experience this, very, very extreme and significant pullback. But do know that this volatility, these markets are primed for this type of volatility at the moment. So you can see there really the lack of volatility for so long. You can see from just even taking this point in here, what was it, in March time, we're just sort of seeing sort of grinding markets pushing all the way up, no real sort of corrective move to any great extent. It's just constantly on that little grind. But now that seems to have changed. You can see the volatility from high to low, and you can now see the pullback trade. So where does this market go? That's the question. When we were at this price point here, we were looking for prices to continue down, not too far lower to be fair, but down to the 4,000 level. We failed to get to that target place. Instead, we reversed really quite sharply, but now it looks like we could be attacking that price once more. The beauty about, if you get into a trade and you take a loss but your commitment is still correct, or perhaps you're a little bit more validated in the trade selection, and These markets are flipping from risk on to risk off almost on a daily perspective. So it is quite challenging and quite tough. But our bias has been, since we saw this little sell-off last week, has been to the downside for these equity markets. And Ismail, good afternoon. Delighted for you to join us.
More from ECB's De Guindos says if rising yields is unwarranted, we will act. Just to repeat, ECB Vice President there, Luis De Guindos, says if rising yield unwarranted, we will act.
Okay, so we're getting these central banks just, try to ease these market tensions.
If there's a recovery, yields will have to go up, says De Guindos.
And that yield story going up is it can be a bit of a game changer for these equity markets. So, markets have been pushing higher since 2010, and we've seen 11 years of markets that are continuing to make higher highs, and it's largely down to the quantitative easing and the low interest rate environment has kind of encouraged that. It's been very, very supportive of these stock markets, not just from a monetary policy perspective, but also from a fiscal policy perspective. We've just had, over the last 12 months, we've had some major spending plans announced from Trump and also from Biden as well. One of which is putting money in people's pockets. What it does is it increases demand, pushes prices up, and then creates a bit of a problem for this inflation story. And one of the ways in which a central bank can mitigate the downside of inflation, the fact that prices are pushing higher, is by increasing interest rates. The problem is you start increasing people's debt burdens because we have a debt-laden economy. Governments and personal households and corporate are loaded, stacked with debt. That's been the downside of the policies that have been pursued. And of course, if interest rates go up, the cost of servicing that debt also goes up, and therein lies some of the difficulties.
We're going to see positive growth in the second quarter.
So it is a trade-off between growth and inflation, and it's trying to get that balance right. And at the moment, the markets are not sure whether they actually believe the Fed. There does seem to be a bit of a credibility, let's say a bit of a question mark over the Fed's position. And that's what we're acutely aware of, because if the Fed turn out to get it wrong, like the Bank of England did in the late 80s, where we saw George Soros capitalize on trading the pound in contradiction to at the time the monetary policies that were pursued. We obviously can see in history how that played out. So is this happening again? Does it have enough credibility in what it's saying? It's saying there's nothing really to worry about as far as inflation, but we saw CPI figures last week which were quadrupling the expected number. So you wonder if this uptick in prices and demand and this upsurge in reopening and the fact that the vaccine rollouts are performing very, very well, you wonder if it's going to create more of a surprise for the Fed than anticipated. So we shall see. But for now, these equity markets are squeezing lower, and that's the important thing to sort of get that straight in your mind. And sort of moving on to Ismail, what's for the Nasdaq, please? Very similar situation as you can see to the S&P, and across the equity markets are all in the same boat. So these were all sort of sell trades from last night. If I look at the daily time frame, you can see the entry last night. The actual level, it was this level here, the 41.26 below today's daily low, and it was the same for all of these equity markets. So 13,188 in the Nasdaq was the high probability sell trade. It was actually a 2 daily low as well. So when you get these levels stacking up, they actually mean an awful lot more at that point. So a really great sell trade in NASDAQ. The Dow Jones was up a little bit higher up here, just below yesterday's daily low. So 33,973, just below that 34,000 level. So really, these markets are moving lower. We're in a risk-off market condition. So that's the kind of the fundamental understanding about what's going on with these markets. The question always becomes, how long will this last for? And that's the kicker. That's the difficult part. But as long as prices are pushing lower, then we're looking for sell trades across these markets. The NASDAQ as well, it's held up surprisingly well. You would have expected this to take another leg to the downside. We are below the monthly low. So we'll have a look at the Nikkei, should I say. And I know many people trade Bitcoin, so this has taken a really, really strong move to the downside. We've had a number of our traders contact us in the last couple of days about this market. What should we do? Firstly, it's a hugely speculative market, so we're hearing a lot of, let's say, trading gurus, say this, that, and the other about these cryptocurrencies markets, and the reality is they have absolutely no idea. Technically speaking, this market is now clearly rolling over to the downside. So this is the important level. The $46,000 or the $47,000 level. That implies there's going to be further downside pressure in this market. And like we've discussed with a few of our traders, it's now like trying to catch a falling knife. So that the knife is falling and we have traders there trying to catch the lows.
China says they are willing to cooperate with the United States on COVID, according to the Global Times.
There's no reason for these markets, because they're so speculative, to respect technical support and resistance, although that's what you'll hear an awful lot of. So the next area of interest for this market would be in and around this type of zone here from a technical perspective. As you can see, we flushed clean through that level. The next level is actually down at the $30,000 level. So you've basically got another sort of $10,000 move in this market, which we've already, just today alone, we've pushed sort of $5,000 lower. So actually, that's very much in the realms of possibility now. And then beyond that, you've actually got these levels down here. That's your next level, and these are only just technical levels of support and resistance. So calling where this market is going to stop and turn around right now is virtually impossible. And we're hearing a lot of commentators online saying, yeah, 40,000 is the 42,000, 40,000, 38,000 are all sort of buy levels. But the reality is, unless we get a floor being created where you get this to the downside, you get that kind of coming together of price action. Unless you get those floors created and you get prices reversing, this is only heading lower in the short term. That's our opinion. We don't profess to have the answers to this market, but this could very easily be down at 30,000, 20,000, 10,000 in a matter of days and weeks. There's nothing to stop that from happening. We've had the central bank in China reiterate, for some strange reason, their stance that they're not accepting Bitcoin as a payment form, and that's where these central banks can actually really slam on the brakes as far as these markets are concerned, because it's all about adoption. It's all about adopting the technology behind something like Bitcoin, and that goes for all the other cryptocurrencies as well. It's the mass adoption that makes this coin incredibly valuable. Now, there's a lot of people that sit on one side to say that yes, mass adoption is on its way. We've seen signs it's being adopted by big financial institutions. Yes, the answers are all absolutely yes. But will that be the case? And that's the difficulties with some of these cryptocurrencies. But right now, it's like trying to catch a falling knife. What you want to try and do is wait for the markets to just bottom out, just to behave something like we saw in here, where you can create these lows, and we can start to see that prices are eventually beginning to tick higher. Then you can look to plan your next opportunity. But trading Bitcoin and any of these cryptocurrencies come with a really significant risk warning. These all-time highs up here around the 64, let's say the $64,000. Now we are down at, let's call it 38,000. Whoops. 38,000. That's an awful attempt at drawing this, isn't it? Okay, let me do that again. Okay, so 38,000. So that is an incredibly significant devaluation. Anyone from here that are buying this market with leverage are completely and utterly burned at this stage. Trying to hold on to these trades. That's why we've always been advocates of trading Bitcoin without leverage if you can possibly manage that. Because trading this with leverage, you're going to end up burning your account. It's like walking into a casino and just putting all your money on black. It might come in, it might not. So that's the difficulty with it. So there's your sort of devaluation. You're talking about sort of 40%, 32, yeah, about 40% or so devaluation in a relatively short period of time, and that could easily be down at a sort of 20k. Like if you said to me, would I be surprised if in a week's time we were down at 20k? I would say absolutely not. More than possible. And then it actually does become really quite interesting for some buying opportunities. Because what you can do is if prices get to a really attractive level, you can scale yourself in, and even if the price drops lower, you can still scale yourself in and reduce your as the market is pushing lower, you can end up reducing your combined entry price. So it is a strategy. It is kind of doubling down, which is something that you really got to be careful about doing. Finbar, yeah. So Bitcoin back to 20k. You think? Yeah, I wouldn't be surprised if we got a move. I'm sure you'd get a very at whatever level this level bounce, we're probably likely to get quite a significant bounce to the upside eventually. So anyway, I just thought I'd just spend a little bit more time on Bitcoin. So going back to our trade plan, really, the S&P to the downside, I think Ismail, very much further downside in this market. The one question mark we have is over the meeting minutes. We have the FOMC meeting minutes at 7 o'clock, and although a lot of that is prepared for, we very well may get some volatility around it, depending on how the market interprets. And it's not really our interpretation of the meeting minutes; it's the interpretation of financial institutions and those that are big players in this market. It's their commitment that is what we'll be looking at very, very carefully. So we will look into the S&P or the Nasdaq. We can look at levels at which we can look to get in. We've extended the move. It's been extending to the downside through the Asian session. And now we're at these lows as we go into the US session. So is there more downside? It's very much expected in the future price. We'd expect further downside going into this US Open unless something significant changes. So I suppose at these lows, waiting for a pullback, if you can get it now, would probably be the opportunity. If prices sort of pushed back in around the monthly low, somewhere around this 13,100 level could be an opportunity to actually take the next leg to the downside. But certainly the bias can be to the downside, and with further continuation lower as well. There's no reason to suggest that that wouldn't be the case. So David, you got that EU high of the day. Let's have a quick look. So we'll come back to those indices in just a moment. Some of the other markets we were looking at. Yeah, brilliant. So it did bounce a little bit higher yesterday, didn't it? But as you can see, it's just kind of rolled over. And if you remember, yesterday we had this strange market condition with the equities rolling lower and the dollar weakening. And that makes us always very uncomfortable, certainly over the last 12 to 14 weeks. So, yeah, we were looking at this market higher, weren't we? We didn't get into it either because it reversed, and then we started to see the structural failure trade to the downside. So it then became a tough opportunity. As long as that uncoupling between risk on and risk off and the impact on the safe havens, as long as we're not really seeing that play through, we are generally a little bit more cautious and not often that willing to jump in. But it is interesting. It did push up to these levels, up to these highs. 22.44 level. So it did get that little break high, didn't it, before flushing to the downside. But yeah, really good shout. I don't know where you placed your stop loss, but and if I remember, you were looking at taking profit around these lower levels. But with the correlations, it's really a case of just looking to stick with that trade, I guess. And there's no reason why not. Yeah, you'd expect a further squeeze lower, especially if these indice markets are continuing lower. And we're seeing that weakness across. We're getting a little bit of a bounce now, but generally we're seeing that dollar strength trade play itself through across all these across all these markets. We're seeing the dollar strengthen. So that was the messy market we were talking about over the last few days. And it's not a bad philosophy to adopt, but if you're in doubt about trading, stay out until it gets a bit clearer, until it cries out at you to just take the trade. Those are the trades that are really worth pursuing. So euro clearly is stronger than the pound right now. So gold market, no surprise if we got dollar strength to see the gold market take a roll lower. What it means, like we saw back here, is that it can give us an opportunity to get in at a lower price. So we'd like actually this market to bounce back a little bit further. There's no getting away from the nature of this market, which is consolidative. It's just moving sideways. Yesterday we were up at making these highs and it's kind of failed. Now we're potentially down at these lows, probably will fail again. So we want to just clock all of these levels to the upside and to the downside and suggest the likeliest outcome for this market until we get that coherent breakout to the downside, which will be above the 66.42 to the upside, or if we get a close below something like the 63.80, something like that. Those are your levels of interest for us in these markets. And while this market is just playing within this little zone in here, we can exercise a little bit of patience. Ultimately, our bias is to the upside for crude oil, but if it bounces lower, it might give us an opportunity to actually buy at a much lower price. So that's kind of the dilemma with crude oil at the moment. Indices lower. We'll see if we can get into a couple of these trades now. see if it stacks up for us. And it's really all on these inflation fears. Just the potential that the Fed may be getting it a little bit wrong on the inflation story. So very, very well done on that trade there, David. A great shout. You are selling the highs. You are selling into a bullish market at the time, which is fine. Nothing wrong with that. We're always strong advocates of being consistent in your decision making. It does make it harder. I appreciate you've got a bit of experience under your belt, which is good. It's essential, really, but it can be quite challenging, that sort of decision making for those that are perhaps newer to trading markets. So as a result, we've been sort of educating traders about trading the trend, going with the market flow rather than going against it. It's easier to just identify and look to run with it. So brilliant trade that. In the UK 100 at the 69.62, but the day before you were long, Finbar. So your entry is 69.62, brilliant. It's this little breakout trade to the downside. Yeah, look, no real surprise really to be buying these equity markets, because that's been the trend now for quite some time. So the level that becomes quite important for this particular market, and that's really a strong rejection, is the fact that we're making lower highs now in this market. So as this market pulls back and we fail to make a new high, if we flush below this level here, so there's your first target around the 6,800, and if it breaks through, you've got a target further down here, the 66.94 level. So probably another 100 points or so to the downside. But there is strong levels of support in at these levels in here. So, and if we can step back with it, obviously with no emotion whatsoever, and we can do a little bit of analysis, an awful lot of the price action over the last couple of months has been sideways moving. So we're actually in these consolidative zones as we speak. So generally we like to trade the breakouts to the upside. So you're absolutely right to be looking for a buying opportunity above the monthly high consistently is probably the trade to be looking for. It just so happens on this one particular trade, it's rolled back over. So I can understand the buy trade. It's don't beat yourself up over that decision. And we talk about being consistent over 100 trades. If you have a market that's pushing higher and you take that trade and it's in a momentum trend trade to the upside, and you take that trade 100 times, you're going to make profit out of those trades more often than not. So that's really stacking those odds in your favor. It just so happens on each individual one trade, you should never really allow it to take over your whole trading approach. And again, that's what can happen to those that are perhaps new to this environment. Yeah, can we check the euro pound? We'll have a quick look. So equities lower, dollar higher so far is the trade to kind of focus on really for the trading session, as we will see some capital coming into these markets now. Yeah, we just don't like it, Finbar. Would you be looking to buy or sell? What we'll do is we'll just like this market is just in this little zone here, and we've already had 1, 2, and is this going to be our third false breakout to the upside? We'll just have to wait and see. You know, to sort of help with some of your decision making, like if this was a high and then tomorrow we break through to the upside, then there's your higher probability buy trade. If prices, you know, break above these highs. Today there's a little bit of a question mark over the trade, because over the course of the session we might end up rolling back below the 86.12. So then that means we're still in this consolidative phase. So it might just be a case of just being a bit patient. That's certainly our view of that trade. Yeah, so you're in a 5-minute long, 10-point stop. Very good, David. Yeah, you're just trying to capitalize on the bounce back. So you could argue there's every opportunity. This is quite a strong level of support and resistance just in here. So getting a pullback to roughly the 41.80 is a very, very viable trade. It's your secondary trade. It's again, we just look for the primary trend, which is at this current price. In fact, you are actually trading the primary trend. Hang on. So if we look at it on the bigger time frame, the trend is clearly to the upside. We have these days of kind of strong selling, but then when we go into the smaller time frame, you know, we're seeing these markets just take that little rollover, very much in line with the indice markets. So really, what we'll do is we'll get our confirmation from
French government spokesman confirms France is still aiming to open up for vaccinated US citizens on June the 9th.
So we have these economies reopen, so it is that sort of growth story that can be capitalized on. So really the indication actually comes from these global indice markets. So yeah, you got a 10-point stop loss or a 10 pip stop loss. So yeah, really tight trade. It's a defined level of support. So and you got your stop loss just down here beneath this little low. So the likelihood is we'll get a little bit of a pullback trade, maybe up to 41.80. I don't know what your target is from a take profit perspective. Finbar, yeah, that 6,800 level is not a bad level for FTSE. Yeah, and if it breaks through that 6,800, you know, you're kind of squeezing lower. So maybe a little bit higher than that, maybe in terms of scaling out or taking profit, perhaps. But yeah, you're in the right zone. You're short in it at the moment with the. Okay, so you've taken a short trade in the euro pound. Okay, that's a brave trade. The euro has been quite strong. We just have a narrowing of price action, as you can see. So we have a narrowing. So eventually we'll get a breakout, but it could be higher, or could be lower. So we'll take note of these highs, and that will determine the direction really for this market. Right now it's just in this little funnel, little sideways moving pattern. Okay, so let's put together our trade plan then for the session. Getting a little bit of a bounce off here. If you look at it on the daily, we've got the 50 period moving average, and that was the level of support that we saw last week as well. It's just now that 50 period moving average is at a higher price. So if this market flushes through that level, we're pretty much game on. Let me just insert so the 100 period moving average, we can have a nice green down at these lows, and if you don't mind, I shall put in a 100 period moving average, sorry, a 200 period moving average on the daily time frames. We'll turn it nice black color. So really down at these lows down here. So if we are genuinely in corrective territory and we break through the 40.36, the next level of support is the 39.66, and then the next level of support is sort of down here within this zone here. So it just depends how deep this corrective move will be. It always felt, we spoke about this little move yesterday, last week, is that this little bit of buying largely felt a little bit like manipulation. Still the sentiment was quite negative. It was all about, the inflation story and the fact that we had really poor CPI on the Wednesday, and I think it was the Thursday we had really poor PPI, and we started to see prices push higher. So that feels counterintuitive. You'd expect softening, and we actually saw strong price action to the upside off the back of very poor news. So what that creates is this dynamic of bad news, positive price action. And when you get a situation like that, then what you should be looking to do is to get in at higher price, which is effectively what we ended up doing. But that's the psychology of the situation as well. Was this going to break new highs off the back of really poor inflation data? Probably not. It was probably never really going to be able to do that. And now we're getting a follow through. So now it just becomes a bit of a question mark in terms of, will we break through this really important level in here or not? That's the key. So it makes it a little bit difficult to get into it. You want a constructive pullback on this trade. And actually that would mean pulling back all the way to 41, 43 level. So about 50 points higher than these current prices. And just for your information, like, to get a qualified pullback, and then if you get that next leg to the downside, what it does from a risk management perspective is create quite a strong technical level to book in profit. Bring down your stop loss to there, you're booking in that much profit, and you're allowing the trade to run and make new lows. But we don't have that opportunity just yet. But if we're patient, we will do. Okay, so it's quite tough to get into this market now down at these lows. We really do need a pullback trading opportunity in those. So what we can do is we can tidy up the chart a little bit, so we can. So this is a potential level of support. So it'd be a case of coming back up to these levels to see if we get the next leg lower. I mean, at these valuations, we wouldn't be surprised at all if the market took a very, very significant correction, with everyone jumping into these markets to the upside, just looking to bail out and book in profit as a higher price as they possibly can. So these markets can really roll over. The problem with gold is it's a hedge against inflation. So so you'd actually be looking for buying opportunities in markets like this. A lot of these purple levels are just like intraday highs and lows and levels that are of interest to us. On the Nasdaq, Ismail, I don't know if you're still with us, but there could be an opportunity below that 13,000 level. It's a strong psychological level in these markets. Might get that little flush further to the downside. There is some support around here. If we look at it, you know, it does tie itself in with this little level more recently. And again, what we'd be looking for in this market is a bit of a pullback to get into this trade to the downside. So that's the Nasdaq. Last week we were talking about Fibonacci levels as well. The next Fibonacci level is down at the 12,922 level. So we're firmly in between the 50% retracement and the 61% retracement. Okay, so the euro pound is just in this little zone. It's quite tough to work within that at the moment. You can keep an eye out for it. And so I'd like this market to just pull back a little bit further. Sorry, in terms of the pound dollar, to just pull back, what would it be, an extra 10-15 pips? Then at least it would be in keeping with...
We're 10 minutes away from the bottom of the hour and the release of Canadian CPI data for April. We'll be leading with the CPI year-on-year print for April, seen rising by 3.1%, the range 2.9 up to 3.6%, and that's against a prior 2.2%. CPI month-on-month for April from Canada, seen rising 2%, the range flat up to 7% against a prior 5%. Moving on to the core print, the CPI common seen at 1.7% up from 1.5%, the median seen at 2.1% unchanged from the prior, and the trim seen at 2.2% also unchanged from the prior. Finally, the Bank of Canada core CPI print for April, a prior of 1.4 in the year and 3% on the month. do have house price data due from Canada as well. The Terranet National Bank House Price Index, month on month, prior at 1.5%, year on year, prior at 10.8%. Going back to the CPI numbers, quick preview here from HSBC. They're looking for 3% year on year and spot 1% on the month, so they are slightly below the market consensus. They're expecting consumer prices to rise, boosted by some extent by the anticipated 2.5% increase in gas prices for the month. The larger story, though, they say in their view, will be the jump in the annual rate to 3%, owing to base effects. It's largely related to energy. They're looking for the end.
Okay. So sorry, that was our Squawk service. So just a little bit on support and resistance. When you see levels where market reacts in a similar fashion over a number of periods of time, so like for example, we would determine approximately the 4180 as a strong level of support and resistance, meaning it can provide resistance when prices are below, and it can provide support when prices are above. So it keeps coming back to that level. And if you can identify these levels, you can see how it can, I suppose, help you with, first of all, trade selection, and secondly with your entry levels. And so prices are now, we've broken through to the downside, and prices are now below this level of support and resistance. So now if the market pulls back, which level do we expect it to work with? And I am conscious there is a pretty small level of support and resistance at these current prices. You look at previous lows on the way up, and previous highs on the way down. But the major level of support resistance is back at the 4180. So we would just simply wait for the market for the pullback trade to kick in. We want prices coming back inside this zone, and if the market performs as per our expectation, then fantastic, we can take this lower, and that would be kind of what we'd regard as what we would expect to see in this market. You can see it's kind of complicated at the moment with this level in here. So what you can simply do is wait for this market to flush to the downside, and then there's your high probability sell trade. But it's more of a breakout trade rather than the pullback. So the pullback is an opportunity if it pulls back to the 4181, but it could be a momentum continuation trade to the downside, or a breakout trade below this low if it fails to do that. So, and that's what we teach traders, how to identify these types of opportunities and look to read this like a book. We want to read the chapters, but we can almost preempt what's likely to come next if it's a book that we like, and that's what trading the financial markets is all about. It's really just trying to understand what's likely to happen next. Put all your analysis together and you come out with a bit of a trading plan. Okay, so some of these markets are currently in the process of pulling back as we speak. So so was there any other markets in here? The Euro Yen from last night's trade plan session. So this market has continued to the upside. Okay, so what I might do is we might just put our trade plan currently up on screen, and then we'll let you go for the session. So we're currently pulling back to this level in here, so there might be a selling opportunity around this market. So we change the color to our selling red. So this time it's at the high probability. Whoops, don't know what happened there. It's a sell trade around the 22.16. 22.16. There's your high probability sell trade. The other thing to note about this market is that what we're currently experiencing, or what we have currently experienced, is largely just a pretty linear pullback. So actually this level, the 21.87 is your high probability sell trade. It's a structural failure to the downside. We're only sort of clutching at straws with anything else at the moment. Okay, we'll have to go for the structural failure trade. Around the 21.88. So that's going to be our plan for this market. So that's our trade plan for the euro dollar. You see, this is the difference between those two. The euro dollar is just selling off from the highs, but what you can see is there's a lot of consolidation. Did I take it from there? Yeah, so you can see the level of support and resistance that's been created. So now a pullback to that level makes an awful lot more sense for a sell trade, just at a slightly higher price. So we can certainly look at these. So we're looking at the lows as prices are pulling back. So we can look for a sell trade. We don't really need this one in here, confusing things. So we can look for a sell trade in this market around the 41.80 level. So sell trade around that 41.80 level. And you have the 80-20 rule as well. And you have structural failures to the downside. So your first opportunity is the breakout trade below 41.80. Your second opportunity is to pull back to that level. So we're currently pulling back. We just need to give it. Yeah, there's an opportunity to scale yourself in if you wanted to take like a half a risk trade. There's a sell opportunity now. We'll wait for the structural failure sell trade to kick in. The euro yen is an interesting one. On the hourly, we just have prices really failing to close. Either above or below. We're kind of in this little sideways moving pattern. And this is an hourly time frame as well. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, we're talking about 8 or 9 hours where this market's failed to either close above the 133.32 or close below the 133.19. So for 9 hours for this market to be relatively range bound over, let's see, sort of 13, 14 pips is not great from an opportunity perspective. So it looks like it's going to push higher from here above the 133.32, but let's see if it can close above that level, because that's what this price action's telling us. It's, you know, as we read this book, yes, the bias is to the upside. We'd look for a buying trade, but we do want to see this market close above that important level, because it's had a few rejections, and you just want to avoid just this market just rolling back to the downside. If you can imagine that happening, it would give you an opportunity, maybe buying at a slightly lower price though. So, you know, with these moves, there's always counter moves. There's always things that you can look at again. So the 133.32, 133.32 is for the euro yen. So we do need to see that close on a. So let me have a look at it on the 15-minute and see how that picture changes. Yeah, on the hourly time frame, we'll stick with it on the hourly time frame. If we get that close above it, it's a viable buy opportunity at that point. So there's absolutely nothing wrong with taking trades on different time frames. So the Nasdaq, it looks like we're going to get that next flush to the downside. So it doesn't look like we're going to get an opportunity to get in on a pullback really. So all you're doing is selling the lows, which from a probability perspective it's not a fantastic strategy. Although it's likely to be a successful one in the short term for these markets. The problem with your entry is, where do you place your stop loss? You know, you could sort of look at this handle here and place your stop loss above it. You know, if you get a pullback, it's likely to be taken out. So it's not really a high probability sell trade unless you have something constructive to work with. We're currently in the S&P to the downside, so we're hopefully going to get a decent trade out of this. We're probably close to 2% now in terms of return on our risk. So your risk one, we're currently around the 2% return mark, but we do expect perhaps another couple of percentage gain off this trade to the downside, just purely because we look to let our winners run, and we never know which market is going to be that out and out winner. At least we got coherent markets today. That is the good news. So gold, we're just monitoring. We're not really going to get into that trade. Okay, so on that note, guys, we're going to have to wrap this up there. we've got another trading session to move to. So look, give us a thumbs up if you can. Subscribe to our channel. We'll be delighted for you to join us. Obviously, completely free of charge every day. From next week onwards, it will just shift. The starting time will be 12:30, so it'll be hopefully a nice punchy sort of trading hour. And if you can join us for it, fantastic. We can hopefully benefit from these markets together. My pleasure, guys. Thanks so much. Thank you, Finbar. No worries. I suppose a little bit more sort of educational based today, really, because we've got some of these opportunities that are kind of currently in the pipeline. So we'll see how we get on with those. LEJ, absolutely my pleasure. Good to have you with us. And like I said, we've got we'll have this session every single day from next week onwards, but it'll be starting at 12:30. So we'll get in, we'll have a look at the news events, we'll put together our trade plan live on screen, and we'll look to execute trades if we get those opportunities, and we'll be done and dusted sort of in about an hour or so. So hopefully you'll enjoy that. So listen, on that note, take care. We'll see you again tomorrow at actually 12ish is when we're currently starting. We're just going to have that time shift from next week onwards. So we'll close out this week, and yeah, feel free to join us. So give us thumbs up if you can. Of course, subscribe to our channel, and for more information about how we help and support traders, you just go to our website, thelivetraderoom.com, for more information, and feel free to contact us through the chat function as well if you have any questions or you want to discuss things in a bit more depth. So from everyone here at the Live Trade Room, thanks so much for joining us. Do take care. We'll see you next time. Bye for now.